Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. I'll start with ice raw sugar in New York. Now, I must apologize once more for the multitude of lines and labels that I've had to draw on this daily chart. However, technically, there's still a lot of going on here, and these labels and lines are all valid in my deciphering what is happening here. The declines early this year below the long moving average, currently at 1881, are as a result of three patterns created between August 2021 and January 2022. I've already previously highlighted all three of these patterns and even pointed them out with a cursor, so I'll not spend too much time on them other than to say that they are complex versions of normal workaday patterns. One of them, it's just a one, managed to achieve the primary target on the downside. Nevertheless, there are some interesting points to discuss. The neckline of the most recent pattern, the October 2021 to January 2022 head and shoulders top, currently at 1753, plus the middle time, after a fashion, currently at 1869, managed to stop the decline. The recovery back upwards was prompted by an immediate countering weekly key reversal up 4 weeks ago that reached up as far as the neckline of the older August to November 2021 complex triple top, currently at 1985, before halting and once more again dropping down to the mess of congestion supported around the middle time of this December 2020 to April 2021 bullish shift pitchfork, shallowly bullish shift pitchfork. These supports were and still are the combination of the February 2021 high at 1894 and the medium moving average currently at 1893, the rising long moving average currently 1886, and the significant slowly rising short medium moving average currently 1860. This congestion between 1860 to 1894 had been enough to turn the market back up and out of the zone and through a dead zone up towards the older neckline currently at 1985, though as yet prices have not reached it. There are two other items I'd like to look at before I finish here. Firstly, to look at the whole of the 2020 action, maybe even including the drop in December of last year, as a possible double top, maybe a triple, a possible double, maybe triple bottom type action. I've not yet made up my mind on this, as it seems to be another complex pattern, but is nevertheless still there. The other is more immediate, and it's a look at the March action as a possible monthly key reversal. Thus, if we have a close this coming Thursday, the 31st of March, either over 1822 or under 18 even, then we'll be on. Right now, we are most definitely looking at a monthly key reversal up. Ice Europe white sugar in London. This market made a big meal out of the break upwards out of September 2021 to February 2022 lopsided diamond pattern, with a number of false breaks in both directions, including a gapping changeover. Until 5 weeks ago, the market made a gapping move higher through all the moving averages and finally managed 4 weeks ago to punch up over the 2021 high at 530.60 and filling in the gap between 531.70 to 532.70 left over from March 2017. However, doing that was enough on the upside, or rather reaching up to the March 2017 high at 548.70 was enough on the upside for that moment. We then had a pullback down that interestingly halted at the congestion from early 2017 at 517.80 2 weeks ago before restarting its journey higher. The main feature of this move was the gap higher made from 2 Fridays ago to last Monday, with that Friday also being a daily key reversal up. Add to that, we had a golden cross of the short stroke medium moving average, currently 510.90, up over the medium moving average, currently 507.40. Now, whilst this is still a bullish indicator, it is a lagging indicator, and one should bear that in mind. I'd now like to discuss two other patterns and their opportunities. The first is one I mentioned in last week's commentary. It is to regard the whole November 2021 to date action as a very rare double, triple, quad, or even quintuple bottom. This pattern's actions now are moot, as last week I pointed out that the primary target for such a move had already been achieved at 539.5, and we just had the secondary target, which is at 548.70, which is the same as the previously highlighted March 2017 high, and also a cap on the market from 3 weeks ago. Well, last week prices reached up to the secondary target and the cap and the March 2017 high and punched up through all of them. Finally, there's the opportunity I discussed last week of looking at late February to date action as one of two patterns, either a possible bullish halfway hesitation or a possible double top based on that same cap. And that's at 548.70. Last week it had been too early to say which is which. However, I had floated the idea of a possible bullish halfway hesitation 2 weeks ago, and it is this which it seems the market favours. Hence, I had indicated a possible point on the upside to look for in the 570 area. Well, I can finesse that further for possible target X in the 572.20 area. The market still has to overcome the February 2017 high at 565 even, but it is there on the daily chart as target X. Sugar white premium spread. Last week and the week before, I'd spoken about how we were back up to 3/4 key patterns running in this market. The first was one I had mentioned many times before, the mid-August 2021 today uptrend, currently at 107.50. This is still quite a steep angled uptrend and one I would normally regard as having a limited lifespan. However, it has been in operation all this time and during its lifetime has become a 5+ pointer uptrend. Thus, this is one to watch closely, on the downside especially. The second is another I'd previously mentioned, is the quite and subtle bullish bow tie formation formed over Christmas, consisting of the rising short moving average, currently 124.25, the rising short medium moving average, currently 105 even, and the recently flatlining but now starting to rise long moving average, currently at 77.75. What had been interesting at the time of its formation was how all the moving averages went in and out of the bow tie in the right order, a rare feat in some markets. Theoretically, the market should move in the direction of the outgoing moving averages, in this case higher, which we have already seen. However, the key move, again, theoretically, should happen between 15 to 20 trading sessions after the crossover. In this case, it will be between the weeks of the 4th of April to the 9th of May this year, so very soon. Hence, I repeat my suggestion of recent weeks of putting a note in your respective diaries and calendars for that period, just in case. The next utilizes the existing uptrend but connects the tops since July 2017, such that we have a huge ascending triangle pattern, currently 107.5 to 113.75. This ascending triangle broke higher 2 weeks ago. Thus, we now have a potential topside target X that is just up off the top of my daily chart in the 162 even area. Before we all get too excited with this topside target, there is one final pattern I would like to discuss. I'd previously spoken about it this way, and I quote, "Finally, there is a pattern which, whilst not directly touched, may be indicative of the bullish angle attack of this market. It is the 2019 to 2021 bullish Andrews pitchfork. The market is currently in between the middle time overhead, currently 129.75, and the lower time below, currently 55.5. End of quote. I further added, and I quote, "The upper trend line of the ascending triangle runs approximately parallel to the middle time, and that is also something to watch." End of quote. This bullish Andrews pitchfork is still operational and provides, with its middle time, the next major obstacle before the market tries up to the May and June 2020 highs at 134.25. Since then, we've had a test up to the middle time and close last Friday just over it, but not enough that today's contrary action has not pulled us back below it. It is definitely one to watch. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investor Services International Limited. And here comes the final bit.